Ladies and gentlemen, thank you for standing by. Welcome to the Tel Aviv Stock Exchange Q4 and Annual Results Conference Call. All participants are present in a listen-only mode. Following management's formal presentation, instructions will be given for the question and answer session. For operator assistance during the conference, please press star 0. As a reminder, this conference is being recorded March 24th, 2020. The recording will be available publicly on TASE's website. With us online today are Mr. Itai Ben-Zeev, CEO, and Mr. Yehuda van der Walde, CFO. Before I turn the call over to Mr. Itai Ben-Zeev, I would like to remind everyone that this conference call is not a substitute for reviewing the company's quarterly and annual financial statements and interim report for the fourth quarter of 2019 and yearly 2019, in which full and precise information is presented. In addition to IFRS reporting, we might mention certain financial measures that do not conform to generally accepted accounting principles. Such non-GAAP measures are not intended in any manner to serve as substitute for our financial results. However, we believe that they provide additional insight for better understanding of our business performance. Reconciliations between these non-GAAP measures and the most comparable related GAAP measures are included in tables that can be found in our earnings press release and in the slide presentation accompanying this call. Both can be accessed on the investor relations portion of our website. Mr. Ben-Zeev, would you like to begin?
Yes, thank you. Good evening, everyone. Israel time, of course. Before we discuss the results of the financial statements of TASE, including our first ever dividend, I would like to address the coronavirus crisis and its effect on the Tel Aviv Stock Exchange. As you all know, the outbreak of the coronavirus in China in January 2020 and its evolving into a global pandemic resulted in uncertainty and strong volatility in capital markets worldwide, including Israel. Since the Tel Aviv Stock Exchange is defined as an essential enterprise of the Israeli economy, it continues to operate as usual, including all trading and clearing activities and regular trading schedules. TASE has operational and technical solutions in place to facilitate the trading and clearing operation and is prepared to continue operating under any scenario, even under extreme circumstances. We have expanded the TASE server farm to remote VDI in order to allow all employees secure access to the organizational systems from their homes. This allows TASE to continue operating while significantly reducing the number of employees that are required to be present at the sites of TASE for the operation of the core trading and clearing systems, all in strict compliance with the directives of the Ministry of Health. TASE trading systems are well prepared and its technologies allow it to handle without a hitch massive trading every day, including the performance of early morning clearing to regulate the load of orders. On March 17, 2020, we hit an all-time record high of orders in our trading system with 20.1 million orders. On March 9, 2020, the total trading turnover reached an historical peak of around 23 billion shekels. Recent trading turnovers on TASE are almost double than the average daily turnover in 2019. For example, in the first 3 weeks of March, share trading turnovers reached a daily average of close to 3.1 billion shekels, more than twice the average daily turnover in 2019. Trading turnovers of government bonds also skyrocketed in the first 3 weeks of March, reaching a daily turnover of 7.6 billion shekel, while corporate bonds soared to 1.9 billion shekels a day, again more than double the average daily turnover in 2019. The Bank of Israel announced that it will be buying government bonds, total amount of 50 billion shekels, to generate trading liquidity and will offer repo transactions to financial institutions with government bonds as collateral in order to moderate the sharp fluctuations and improve liquidity in our financial markets. We are confident that the Israeli government will take the measures that are necessary to confront this crisis and allow Israel to emerge stronger from it. Israel has entered the coronavirus crisis strong, with a debt to GDP ratio of 60%, an unemployment rate of less than 4%, and an annual growth rate of 3.5%. Therefore, I strongly believe that Israel has all the elements in place to ensure that when the crisis blows over, the Israeli economy will regain significant recovery and growth. Yuda, go ahead, please.
Thank you, Itai. Good evening, everyone, and thank you for joining us today. I am very pleased to participate in our earnings call. Let's start with slide 4, which contains some of the key highlights of our annual results. Our revenue for the year 2019 increased by 2% compared to the year 2018 and amounted to 260 million shekel. Adjusted EBITDA for the year 2019 totaled 62.9 million shekel compared to 61.5 million shekel in 2018, an increase of 2%. Financing income in 2019 totaled 9 million shekel compared to the financing expenses of 1 million shekel in 2018. The increase was mainly influenced by positive 4.8% return on the company's investment in held for trading financial assets. The adjusted net profit amounted to 21.4 million shekel, an increase of 3% over last year. And now for revenue in depth. After going over the highlights of our financial results, let's take a deeper look at the composition of our revenue and expenses. Let's go to slide 5. Our revenues from trading and clearing commissions decreased by 10% compared to 2018 and totaled 107 million shekel. The main reason for the decrease is due to a 5% decrease in the trading volumes of derivatives and 2% decrease in the trading volumes of bonds and 1% decrease in the trading volumes of shares. The decrease between the years 2018 and 2019 is mainly due to receding trading volumes in 2019. Our revenues from listing fees and annual levies increased by 18% compared to the previous year and total 54.7 million shekel. The increase resulted from two main reasons. First, an update of annual levies for companies. Second, commencement of charging annual levies from ETFs issuers as of the last quarter of 2018. Our revenues from clearinghouse services increased by 5%, totaling 52.3 million shekel. The increase resulted from an increase in services rendered by the clearinghouse. Our revenue from distribution of data and connectivity services increased by 21% compared to the previous year and totaled 42.4 million shekel. The increase includes approximately 6.2 million shekel that was presented net from costs in previous year. Now I will discuss our expenses in 2019. Please go to slide 6. In 2019, our adjusted expenses totaled 242 million shekel, compared to 227.1 million shekel in the previous year, an increase of 6.5% year over year. The expenses related to employee benefits increased by 3% and totaled 133 million shekel. The growth in the expenses reflects the annual salary raise. Marketing expenses increased by 44% compared to the previous year and totaled 7.9 million shekels. The increase is due to the new sponsorship agreement with the Israeli National Football League, which started in the third quarter of 2019. The depreciation and amortization expenses increased by 33% compared to the previous year and totaled 43.6 million shekels. The main reason for the increase reflects the application of IFRS 16 leases that contributed 8.7 million shekels to the depreciation expenses. I would like now to review our financial position highlights. Please go to slide 7. We have a solid and simple balance sheet. As of December 31, 2019, our equity totaled 599 million shekels and comprises 74% of the balance sheet, excluding open derivative position balances from our clearinghouse activity. In addition, we have approximately 309 million shekel in cash and investment in financial assets. We do not have any financial debt. We have 132 million shekel excess liquidity and 282 million shekel excess capital above our regulatory requirements. The excess liquidity increased by 33% from the beginning of 2019. I would like now to review our cash flow highlights. Please go to slide 8. During the year 2019, the company generated free cash flow from operating activity less investments and leasing payments of 37.5 million shekels. In addition, the company increased its cash balances by 29 million shekels as a result of our excess proceeds from our IPO and from selling shares by the company's shareholders, which they held prior to 2017. Currently, 19.5 million shares are held by stock exchange members who received them in 2017 as part of TASE ownership restructure. If these shareholders exercise their shares, the company will receive the consideration exceeding 5 shekels per share. After reviewing the results for the year 2019, we will move on to reviewing the results for the fourth quarter. Let's continue with slide 9, which contains some of the key highlights of the fourth quarter results. Our revenues for the fourth quarter of 2019 amounted to 66 million shekels, a decrease of 6% compared to the fourth quarter of 2018, mainly because of a decrease in the number of trading days between the quarters. Adjusted EBITDA for the fourth quarter of 2019 totaled 15.1 million shekel compared to 18.7 million shekel in the corresponding quarter of 2018, a decrease of 19%. The adjusted net profit of the fourth quarter of 2019 amounted to 3.2 million shekel, a decrease of 54% compared to the fourth quarter of 2018. And with that, I will turn the call back to our moderator to conduct the Q&A.
Thank you. Ladies and gentlemen, at this time, we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the handset before pressing the numbers. Your questions will be pulled in the order they are received. Please stand by while we pull for your questions. The first question is from Dan Fannon of Jefferies. Please go ahead.
Thanks, and good evening, gentlemen. I guess my first question is on just what's been going on here in the first quarter. You walked through several metrics on the volume side, which are, close to records or very high. But then in the press release, you did mention, certain things around capital raising. And so given we're so far into the first quarter, if you could just kind of summarize as you think about the revenue backdrop, and where things sit for the first quarter today, that would be helpful.
Good evening, Dan. For the first quarter, the first 2 months were business as usual, and our listing fees and raising capital in the stock exchange were in the same pace like in the end of the year and was very high. So the first quarter, it's remaining as usual in all other business, except the volumes in the trading and clearing. So the first quarter, we think that everything is...
With regards to the capital raising, as you mentioned, January and February were strong, and in March, like in the rest of the world, we had basically almost no raising.
We mentioned also that on our investment in governmental bonds, we expected a loss that for today or previous day it amounted to 6 million shekel. It depends on the fluctuation in the markets, what will be the impact until the end of the month. And for the upcoming year, you need to know that we have a deferred income from listing fees, that the minimum income that will record during 2020 will be 19.4 million shekels. It's the deferred income that it's on our balance sheet. You can see that in the balance sheet for the end of the year. So that's the metrics that I can tell you from the numbers that including in the press release.
Okay, that's helpful. Thank you. And then just to follow up on just expenses and thinking about your margin profile in 2020, obviously there's a lot of uncertainty in terms of the revenue and what could happen going forward. But as you think about your kind of fixed costs and your expense growth for 2020, can you frame how we can think about it and the incremental margin profile that we talked about, during the roadshow, and for how you were thinking about the business previously, if that's still maintained, as we think about 2020?
The metrics of the percentage of the fixed cost and the variable cost are not different from the last year that you can mention, that you can take for calculation. There is one issue that you need to take, that between the years the salary increased between 3 to 4%. You can see that in the note about the expenses and benefits for our employees, that the estimate expecting raise of salary. So on that expenses, you need to take this growth, and most of the other expenses are steady between the years.
And I would like to add, hi Dan, it's good to have you on the line. Everything that we said during the roadshow and we wrote in the prospectus, everything is on track and in line with what we see. Obviously, because of the coronavirus, we've seen higher than expected volumes on the exchange. I think the key issue for us, as for other exchanges worldwide, is how long it's going to take. Personally, I don't think that the coronavirus will stop everything from happening in the next 1 or 2 years. We also saw in January and also in February higher volumes in equities trading in the exchange. For example, if I take equities, the average trading volume in January was 1.7 billion shekels, and in February it was 2 billion shekels. Obviously in March is around 3 billion shekels. And I think this is part of the marketing efforts that we are doing and trying to, re-educate the Israeli public and getting his awareness of what's going on and what's the opportunities in the capital markets. So from us, 220, the main issue going forward will be how long this crisis will stay with us, and obviously how the steps that will be taken by the Israeli government will impact the market. For example, what happened in the last week or 2 weeks in Israel was that the Bank of Israel didn't react as fast as the Fed acted in the States, but now the Bank of Israel declared at the beginning of this week that it's going to buy the 50 billion shekels government bonds, and obviously in the last 2 days since this announcement, yields went down in Israel.
Okay, that's very helpful. And then just lastly, and I know it's hard given the macro environment and what's going on with all the uncertainty, but again, going back to some of the initiatives that you have in place that are much longer term, both on the new listings and dual listings front, and understand that new issues have slowed, but just how those conversations have gone in terms of the dual listing potential of firms coming back and coming to your market. And then also the co-location and some of the more product-specific offerings. I assume those, the momentum around them will slow, but I guess just an update, even if what was happening even prior to, kind of March, if there was something to say, that was happened in the fourth quarter and the early part of this year in terms of momentum around those would be helpful. Thank you.
Yeah, sure. So I think, we had a very positive momentum. In January, we had a lot of talks with various market makers and companies and stuff like that. For example, on the cross-listing ETF, we have currently the 23 ETFs of BlackRock, and obviously BlackRock competitors were in discussions with us of how to enter the Israeli market, but since the last 6-7 weeks, everything has stopped. With regards to the Israeli high-tech companies, personally, I think that Israel has the potential to come even stronger with this crisis. I think that, when I'm looking of what's happening in the U.S., with regards to capital raising, valuation, high-tech, a lot of stuff that's going on in the state, I think that the value proposition that Israel and TASE will be able to bring to those companies will be better once this crisis is finished. Currently, all of the companies are heavily, busy dealing with the business and what's going on. But one of the things that we want to leverage from this crisis is to see how we can bring together the Israeli high-tech companies to get the Israeli institutions to put more money into the exchange and explain to the Israeli government that this is a driver for growth for the economy itself, for the employees, and for the whole market. So we are having all kinds of discussions, but currently we are still waiting to see. The Israeli government still hasn't fully decided what will be the measures that will be taken in our market. So personally, I think that this crisis also brings some very interesting opportunities that in some segments can speed up some of our initiatives.
Great, thank you. Appreciate answering all my questions.
Sure. Thanks, Dan.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we pull for more questions. There are no further questions at this time. This concludes the Tel Aviv Stock Exchange Q4 and yearly 2019 results conference call. Thank you for your participation. You may go ahead and disconnect.